There's truly nothing quite like the rush of back-to-back wins in trading. If you've been there, you know exactly what it feels like. It all begins with a single, successful trade. You place the order perhaps with some hesitation, or maybe full conviction, and the market moves in your favor. The price hits your target, and suddenly you feel validated. Your strategy clicked. Your analysis was spot on. You feel in control. Then it happens again, and again. Before long, you've stacked 3, 4, even 5 profitable trades in a row. That's when something shifts internally. It's not just excitement anymore. There's a literal chemical reaction happening, a dopamine surge flooding your brain, giving you a powerful sense of euphoria. This is what many traders refer to as the winning high. It mimics success, but in truth, it's a carefully disguised trap. Winning streaks are intoxicating because they convince you you're unbeatable. Once you start racking up consecutive wins, your brain begins crafting a new narrative about the market and about who you are as a trader. You started off cautious, methodical, patient. You followed your trading rules, managed risk tightly, and waited for solid setups. But after several wins, a subtle voice starts whispering, "You've got this," or "It's okay to push a little harder, you know what you're doing." That voice begins as healthy confidence, but with each win, it morphs into overconfidence. And in trading, overconfidence is like a time bomb waiting to explode. It may not go off right away, but when it does, the fallout is brutal. The problem is psychological reinforcement. Every win delivers a dopamine reward. Your brain links that reward with the behavior clicking the buy or sell button, placing trades. So, your mind wants to repeat it. That's when overtrading starts to creep in. You start chasing setups that don't exist. You force trades. You enter prematurely. You justify it by saying, "I'm in the zone." But the truth is, that zone is usually just a euphoric illusion. You haven't cracked some magical market code. You've just been swept away by the emotional rush of winning. The most dangerous thing about a winning streak isn't the wins themselves, it's how they distort your view of risk. At first, you respected risk because you feared losing. That fear kept you grounded. But as the wins pile up, fear gives way to false certainty. You begin to believe losses are unlikely, and if you do take a hit, you assume it's no big deal. You'll bounce right back because, hey, you're hot right now. This is the moment when traders abandon sound strategy and start doubling their position size without hesitation. What began as careful execution becomes emotional impulse, all driven by a chemical high and distorted perception. They justify their actions with phrases like, "I'm just riding the wave," or "It's house money anyway." But the truth is, the market couldn't care less about your momentum or where the money came from. It punishes pride and rewards self-discipline. One of the most deceptive illusions a winning streak creates is the idea that you've finally unlocked the market's secrets. It's a tempting belief because it feeds your ego. Suddenly, you feel like you've outsmarted millions of other traders. You think you've discovered an edge no one else sees, and once ego takes the wheel, the crash is only a matter of time. Why? Because ego clouds your judgment. It makes you overlook red flags you would have seen before. It convinces you that the rules no longer apply. What was once calculated, thoughtful trading quickly becomes impulsive and risky. And the harsh truth is, the market is always ready to expose that shift. The moment you start believing you're untouchable, it reminds you of your vulnerability. What makes a winning streak especially dangerous is how it warps your understanding of odds. When you're just starting out, you understand on a logical level that each trade stands on its own. The result of one trade doesn't determine the next. But after a series of wins, that knowledge fades. You start to believe the streak itself is evidence of a deeper edge, as if some cosmic force owes you continued success. This is known as the hot hand fallacy, the illusion that repeated wins increase the likelihood of another win. In reality, that's not how probability works. The market doesn't care how many times you've won or lost. It's not keeping score. But once you buy into that story, you begin trading as if the narrative is real. Before we go further, let me give you something that could shift your trading approach for good. If you've ever seen an account vanish due to fear, hesitation, or excessive trading, then you already know what I'm talking about. Trading is far more about psychology than it is about patterns and charts. In fact, it's 90% mindset. That's exactly why I created a guide called the Trading Psychology ebook, a resource to help you master your mind, control your emotions, and develop the kind of consistency that separates true professionals from everyone else. And here's the best part. When you download your copy, you're not just getting a book. You gain access to a private Discord group filled with serious traders who exchange strategies, discuss market conditions, and even share signals in real time. Got questions or need a second opinion? You'll get support instantly from me and others who genuinely want to see you succeed. Just imagine combining expert knowledge with a supportive network that's got your back 24/7. This isn't just another ebook. It's a fast track to trading with clarity, confidence, and consistency. So don't wait. Click the link in the description or the pinned comment. Get your copy and take control of your trading psychology today. Your next big win might be just around the corner. Let's bring this to life with a simple example. Picture a trader named Alex. He kicks off the week with $1. 0 inches his trading account. He's managing risk properly, putting just 1% or $10 on the line per trade. On Monday, he scores his first win. Excellent beginning. Tuesday, another win. Confidence is building. By midweek, Alex has added 2 more winners to his streak, putting him up 4% on the week. On Thursday, he wakes up feeling unstoppable. He tells himself, I deserve to size up a bit. Instead of risking $10, he bumps it up to $50. But the market doesn't cooperate. He takes a loss. Just like that. He's down $50, erasing most of his progress in a single trade, feeling defeated. He refuses to stop. He enters another position, still risking $50. That one fails. 2. Now, he's lost $100, 10% of his entire account, all because he let a hot streak override his rules. Sadly, this is exactly how most traders blow up their accounts. It's rarely one trade that ruins everything. It's the domino effect triggered by emotional decisions. Winning streaks don't just influence your trades, they reshape your identity. When you're winning, you start seeing yourself differently. You feel smarter, sharper, more capable. But when that inevitable loss hits, and it always does, the emotional fallout can be devastating. You go from feeling like a market genius to questioning your entire approach. That identity crash often fuels revenge, trading, an emotional attempt to reclaim not just the money, but the pride you lost. And just like that, the streak that once lifted you becomes the very thing that breaks you. The reality is, streaks aren't inherently bad. They might reflect solid execution and alignment with market conditions, but the real threat lies in how you respond to them. If you treat a streak as confirmation that you're untouchable, you'll start trading on emotion, not logic. Remember, a winning streak doesn't alter the probabilities. It doesn't enhance your edge. It doesn't make you immune to risk. It's just a series of favorable outcomes. Nothing more. If you want to thrive as a trader, staying level-headed during hot streaks is crucial. Yes. Celebrate your wins, but keep your ego in check. Don't increase your risk. Don't throw your strategy out the window. In fact, The more success you experience, the more you need to double down on discipline, because that's when you're most tempted to break the rules. Write this down. A winning streak isn't a green light to take more risk, it's a warning to protect your capital. The market gives, but it can just as quickly take it all back. Your job is to make sure your success doesn't slip through your fingers because you got too comfortable. Every trader will go through winning streaks. They're a natural part of the trading journey, but only those who truly understand the psychological effects of those streaks and can manage their reactions will transform short-term success into long-term growth, rather than painful setbacks. So, next time you're on a hot streak, pause and ask yourself, am I still following my strategy, or am I feeding my ego? That single question could decide whether your streak becomes a launchpad or a trap. Winning streaks are incredibly alluring, but they're also a masterclass in self-deception. The moment you stack up a few solid wins, your brain starts rewriting reality. The market hasn't changed, you have. You begin attributing your results to skill rather than variance. Suddenly, you think your trading edge has sharpened, and that losses are now less likely. That's the illusion of invincibility, and it's one of the most dangerous psychological traps a trader can fall into, because every streak ends, and the longer it goes on, the harder the fall can hit. The problem lies in how streaks hijack human psychology. Our brains are hardwired to recognize patterns and reward success. When we experience repeated wins, the brain releases dopamine, creating a reward loop that urges us to keep doing what feels good. But in trading, that loop can backfire. After a few wins, you may start spotting opportunities that don't actually exist, chasing setups based on the thrill rather than the logic. That's where overtrading begins. You start entering positions that don't meet your criteria just to chase the high. In doing so, that you expose your capital to risks you'd normally avoid. And just like that, a winning streak becomes the start of a losing streak. Overconfidence isn't just a mindset. It shows up in your behavior. Risk controls get loosened. You start increasing your lot sizes, widening your stops, or jumping into trades without proper confirmation. The subconscious belief is, I'm on a roll, the market owes me another win. But this line of thinking is a dangerous illusion, because it breaks the first law of trading. Every single trade is an isolated event. Past performance doesn't determine what comes next. A winning streak creates the illusion of control and consistency, but the market doesn't operate that way. It doesn't track your recent success. It doesn't reward your confidence or punish your fear. It simply moves, indifferent to your emotions. The emotional element of streaks is equally critical. A series of wins brings heightened emotions, excitement, energy, and an inflated sense of capability. That rush is similar to what gamblers feel when they're on a heater. And, like in gambling, the more you win, the more you believe the next win is guaranteed. This leads to bigger, riskier bets. In trading, that means breaking rules, ignoring risk limits, and eventually, getting burned. Emotions can overpower logic. And before you realize it, you're trading based on the feeling of winning, rather than the analysis and process that originally brought success. Eventually, the streak ends, and it always does. When it does, the emotional fallout can be overwhelming. Traders don't just lose money, they lose confidence, clarity, and a sense of control. One of the more subtle dangers of a winning streak is how it distorts your self-image. Traders begin associating their identity with recent wins. After a handful of successful trades, ego inflatus, you start to believe you've become a market expert, someone who has finally cracked the code. But this mindset is hazardous. It blinds you to flaws in your thinking. You overlook early red flags. You rationalize poor trades. You might even dismiss a loss as insignificant. believing your skill will quickly recover it. The truth. This kind of thinking primes you for steep drawdowns. The market doesn't care about how you perceive yourself. It doesn't reward your confidence or acknowledge your identity. It cares about one thing: execution based on risk and probability. Winning streaks also mess with your decision-making through psychological biases. A common one is the hot hand fallacy, the belief that because you've won multiple trades, your chances of winning the next one are higher. But in reality, each trade is an independent event. The market doesn't recognize patterns like that. Just because you won 3 in a row doesn't increase the odds of a 4th win. This illusion can lead to dangerous choices. You begin taking trades you'd normally pass on, thinking your streak guarantees another winner. But when the streak inevitably breaks, those risky decisions often lead to losses that wipe out everything you just gained, and more. Loss aversion also plays a significant role in the psychology of streaks. After consecutive wins, your fear of losing weakens. Your brain, constantly rewarded, starts to see risk as less threatening, but fear is what helps traders remain careful and disciplined. It supports patience, enforces stop losses, and reinforces the need to stick to your strategy. Remove that fear, and the guardrails disappear. Suddenly, a trader who used to risk 1% per trade is risking 5% or 10%, unaware of how much they're truly exposed. This emotional rush can mask real danger. The thrill of the win dulls your awareness of the actual risk you're taking, and when that streak ends, it often leads to what's called revenge trading. The moment a loss hits, you feel an urgent need to win it back. It's not a rational decision, it's an emotional one. Instead of learning from the loss, you chase the feeling of winning. That usually means ignoring your plan, increasing position size, and trading on impulse. The result: more losses. The market doesn't care about your emotions. It simply responds to decisions. And when your decisions are fueled by ego or fear instead of process and discipline, the consequences are rarely forgiving. In many situations, all the gains accumulated during a winning streak vanish, and the trader ends up in a worse position than where they started. Experienced traders understand that hot streaks are temporary. Their goal isn't to squeeze the most out of every winning run, but to maintain long-term performance and consistency. They approach each trade as a separate event, uphold strict risk protocols, and never let a string of wins tempt them into changing their approach. They see streaks for what they are: statistical clusters, not confirmation of invincibility or superior skill. By staying disciplined, they shield themselves from the emotional roller coaster that so often derails aspiring traders. The biggest takeaway is this: winning streaks aren't dangerous because you're winning. They're dangerous because they alter how you think. They boost confidence beyond reason, inflate your sense of control, warp your perception of risk, and lead to impulsive decisions. The trader who can remain emotionally neutral during a winning run is the one who turns short-term success into sustainable growth. A streak should be a cue to tighten your rules, refine your approach, and double down on discipline, not abandon it. Emotional control during high points is a true edge. It's what separates consistent, professional traders from those who eventually blow up their accounts. Understanding the psychology behind winning streaks helps traders predict their own behavioral patterns. Self-awareness is the foundation of emotional control. By spotting early signs of overconfidence, the illusion of the hot hand, and emotion-based trading, you can implement safety measures before damage is done. These include downsizing your position, sticking closely to your plan, and reviewing every trade, win or lose, with a clear and objective mindset. The aim is to stay grounded, not get swept away by a short-term high. To wrap it up, winning streaks are more a test of mindset than trading skill. They reveal who can stay composed, follow the plan, and remain humble even when everything is going right. The market will always offer chances and obstacles. How you react to both defines your long-term success. Accept that all streaks eventually end. Be mentally prepared for that moment. And don't let temporary success lead you into permanent mistakes. Mastering your psychology during winning runs is a powerful advantage. It's the trait that separates traders who grow and thrive from those who burn out or break down. There's no denying it. Winning in trading feels incredible. That moment when your analysis aligns perfectly. Your trade execution is flawless. And your take profit gets hit cleanly. It feels like everything is clicking. 1 or 2 trades like that, and your confidence starts to build. After 5 or 6 in a row, something deeper sets in: invincibility. The charts no longer feel threatening. They feel like home. Each setup looks obvious, and you begin to believe you've cracked the market's code. But this is the start of a dangerous psychological shift: overconfidence. And the tricky part, overconfidence is subtle. It doesn't announce itself. It creeps in quietly. Disguised as justified belief in your skill, it tells you comforting lies. You've got this. You can't miss now. It's time to go big. At first, these thoughts feel harmless, just signs of a healthy mindset. After all, isn't confidence necessary in trading? Yes, but only if it's rooted in discipline. Confidence in trading is powerful, but only when anchored by discipline. The second that confidence turns into arrogance, the countdown to your downfall begins. Consider what happens when you take on something new, whether it's trading, a sport, or learning a new skill. In the early stages, you're careful. You respect the process. You check every move twice because you know one wrong decision could cost you. In trading, that looks like analyzing charts thoroughly, managing risk carefully, and waiting for high-quality setups. That cautious mindset protects you, but after a few consecutive wins, that same vigilance starts to feel excessive. You think, why be so strict when I keep winning? And that's the exact moment where discipline begins to erode. The real danger of overconfidence is how it alters your perception of risk. In the beginning, risk was something to be managed meticulously, but after a hot streak, risk starts to feel smaller, less significant, even invisible. That 2% per trade that once felt safe now seems restrictive. You think, why not bump it up to 5%, or let's double the position size, it's time to cash in. These thoughts seem perfectly reasonable when you're on a winning high. You've been on a roll. And now you believe the market owes you another winner. But here's the truth. The market doesn't owe you a thing. It doesn't care how good your last trade felt. It doesn't remember your past performance. It's unforgiving, and it only takes one misstep to bring you back down. Overconfidence creates a dangerous illusion. The illusion of control. You begin to think you can predict market moves with certainty. And once you believe that, you start ignoring the inherent unpredictability of trading. You take setups you'd normally avoid. You dismiss stop losses. Convinced this trade can't fail, you add to losing positions, expecting a rebound. Slowly, the discipline that built your success vanishes, and ego takes its place. I've seen traders ride 5 or 6 wins in a row, only to lose half their account in a single day. It's not because the market suddenly shifted, it's because they did. They forgot the foundational truth of trading. Each trade is independent. Your last win has no bearing on your next outcome. The market doesn't know who you are. It doesn't track your past wins. And it will punish arrogance without hesitation. What makes overconfidence so dangerous is how good it feels. Confidence is energizing. It makes you feel sharp and unstoppable. And that's exactly why so many traders fall into its trap. They mistake confidence for competence. They think a winning streak proves mastery. But true skill isn't shown in how you handle your wins. It's revealed in how you behave after you win. Can you stay grounded when your mind is telling you to push harder? Can you treat your next trade with the same respect you gave your very first one? That's the true test of a skilled trader. The human brain is hardwired to recognize patterns and seek rewards. So when you start winning repeatedly, your brain makes an association. Trading equals success. Dopamine surges through your system, and you feel invincible. But here's the catch. Dopamine doesn't enhance your intelligence. It boosts your impulsiveness. It blinds you to real risk and convinces you that outcomes are within your control, even when they never were. In trading, you control the process, not the result. In the short term, outcomes are largely unpredictable. You can have flawless analysis and still take a loss simply because the market went another way. Overconfidence causes you to lose sight of this core truth. Overconfidence doesn't just increase the chances of a loss, it virtually guarantees it. Because once you stop following your rules, the probabilities stop working in your favor. Risk management exists for a reason. It's a safeguard against the chaos and randomness of the market. Abandon it because you're on a roll. And you're no longer trading, you're gambling. Gamblers eventually always lose. The trick is keeping confidence in check so it doesn't morph into arrogance. It whispers lies like, "You've outgrown the rules," or "You are the edge." Some deliberately lower their position sizes not because they're uncertain, but because they understand how quickly emotions can creep in. They treat every trade as a clean slate, never as an extension of past success. It's your psychology turning against you. You got complacent? You relaxed your guard. You stopped behaving like the disciplined trader and turned into the reckless gambler. Winning streaks don't collapse because of the market, they fall apart because of the trader. If you can stay grounded when things are going well, you'll stay in the game. When trade after trade goes your way, confidence skyrockets, and you feel unstoppable. The streak breaks, one red trade, followed by another, and suddenly, half your gains are gone. Success has a way of making traders abandon the very principles that created that success. The discipline and caution that were present during the first few trades begin to fade after several wins in a row. You start increasing your lot sizes without a clear reason. You take trades that don't align with your strategy. And worst of all, you begin to believe that losses can't touch you. That false confidence. It's often the first crack in the foundation of your streak. So, how do you avoid this trap? The answer is simple in theory, but tough in practice. Stay emotionally neutral. Don't get too excited after a win. Don't beat yourself up after a loss. Treat each trade as a fresh, standalone decision. Whether you're coming off 10 winners or 10 losers, your next move should follow your plan exactly like nothing happened before. That's how professional traders maintain consistency. They operate on probabilities, not on emotion. If you catch yourself in the middle of a streak, the best move is to slow down. Scale your risk back to your standard size. Go back and review your recent trades. Make sure you are winning because of execution, not luck. If you can't clearly articulate why you entered a trade without using phrases like "it just felt right," that's a red flag. Your process is slipping, and the end of the streak may be closer than you think. Here's something to always keep in mind. A winning streak doesn't make you invincible. It simply shows that you've been aligned with your edge. The market doesn't care how well you did yesterday. It doesn't owe you anything today. Every single trade is a brand new challenge, and the only way to win over time is to stay grounded, focused, and committed to your process. So, let's flip the perspective. What's the longest winning streak you've ever had? And more importantly, how did it shift your mindset? Share your thoughts in the comments. I'd love to hear your experience and keep the conversation going.